The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have a situation going on in the European market across the pond over in Europe, where the price of Deutsche Bank, I've posted it into Tiger TV, it's down another 5% today. All of these banks, if you look at Commerce Bank, it's just amazing how bad these banks look across Europe, and the ones in Italy look even worse. So there's there's a bad situation going on over there. HSBC, all of them, they're just one after another. They're just looking worse and worse. And of course, Terry just mentioned in here, as soon as it gets bad, they take it out of the index because they don't like to have bad things happen. We've seen this happen to the Dow many, many times over the years, which is what they should do. They should keep it representative, but you know, it's just amazing. People don't remember this, but during the 1920s, when we had the Big Depression, 16 of the Dow 30 stocks went bankrupt. One of the stocks, one of the most famous of all, went bankrupt twice. That was American Telephone and Telegraph. So just remember that, you know, we've lost others along the way, Polaroid, and we've lost Eastman Kodak and a whole bunch of others, of course, but that's neither here nor there. Let's get to the markets that we want to look at today. But the Deutsche Bank looks very, very bad. It just doesn't look very good. One of our subscribers over in London also sent us a really interesting chart here on the FTSE. It happens to be a weekly chart, but it's worth sharing to everybody because we do like the Gartley pattern. And as you can see here, that we have a weekly reversal going on right now in the FTSE. You can see we've taken out the lows of the last several weeks already, and this is only Tuesday. So this is a very, very important spot because it did hit the exact 78% retracement up there last week, and then we've reversed this week with the perfect ABCD pattern forming also. Okay, let's put the metal to the pedal and see what's happening here. We got a lot of things going on. All right, let's start here with the gold market because you're going to watch somebody that's made a bad mistake today, I think. We'll see. This is gold. As you can see here, when we were back on the 24th, we were making our second 38% retracement with a potential target of 1452. This was a daily chart. Look at the high on July the 5th. That's very important. The reason why, that was a new moon, and we have a new moon today. So that's why this is very important. Here is where the problem arises. Now, I'm going to share this with you because we have to recognize our mistakes, and this is a potential mistake. So we'll take a look at it. Right now, it's still in the ballpark, but we'll see. Okay, this is what's happening in gold right now. We bought gold the other day when it was down at that 1328 level. This morning, we sold it out when we hit up to that 78% retracement at 1369 and change. We've been as high as 1372, I believe, now. So we've made a 78% retracement. And I posted in here that the correct trade, I know it's really hard to do this because well, you have to do it because it's a Gartley pattern. You have several things telling you that this is it. Let me explain to you what I think they are. First of all, we have that same lunar cycle that we had back on July 5th. We have a new moon, and that's been very good with the market. If you go back and look on the 24th, that was the full moon. So you can see that you know, these things do react pretty nicely to the lunar things. Second thing is we had a 78% retracement there at 1369.50. The third thing that we had is we have an open interest dropping now in silver 2 days in a row. Not much, but there's not been an increase in open interest in silver during this past rally. So that's another reason to do it. But primarily, you've got the ABCD structure, you've got the Gartley, you've got the 786, you've got the lunar cycles, and it's just a pattern. If it fails, it fails. If it makes a new high here above 1381, it certainly is wrong, and we'll have to look to rebuy it at a, hopefully if it backs off, we'll look to buy it on a smaller pattern. But that's the way it looks right now. The reason why I did the trade, I got an email from somebody, and believe me, all that email did was make me think. And because I was exiting the position, I gave all the reasons, and the person said, well, with all these reasons, why don't we go short? And then the more I thought about it, I said, that is the right thing to do. So I put the order in to sell it, and so that's what we're looking at, and we'll see what's going on here. Okay, now that's what I'm looking at in the gold market. So it's going to be interesting today with all the things that are moving around, which they do move around a lot for sure. Okay, now we've covered the Deutsche Bank, we've covered the let's get rid of these so that I don't put them out again. We covered the gold market. The next one we want to cover here, I believe, is the let's just look at the Dow E-mini, because I wanted to show you how weak it really is, because this market, the NASDAQ has been the one that's been pushing this puppy up. But you'll see here that yesterday we made an ABCD structure to the downside, but the rally that we had, even though we made a 61% retracement on Monday, the rally that we've had so far today hasn't done anything. I mean, it's just been going down. So that's another negative sign that tells us that this market has possibly made that big top that we were talking about yesterday. That's the $64 question, and that question won't be answered right away, but it will be answered shortly. Now, we do have something that we did talk about yesterday, and that was in the E-mini S&P. If you'll recall, we looked at that pattern that made the expansion number up there, that 3-drive pattern up at the 2178. We pulled down to 2162, and then yesterday we had a perfect rally all the way up to 2171, and that measured to the 78% retracement on the downside, which was also the ABCD structure, and there was the low we made last night at the 2155 level, and that's what we've had so far. And so all we've done now is we just bounced 4 or 5 points all morning long as the market's getting ready to open this morning. So we'll see, but the things are setting up like we had hoped. So we've got that new moon today, and the thing is, we've got, as Basil would say, bifurcated markets, and you got the NASDAQ that looks totally different than anything else on the planet, and yet the Dow Jones, which had been the leader, is now lagging very badly, and the S&P is following through also. So that's telling us that we've had something important possibly coming up. I've asked for a little change in tune here. Someone's asked me to say something about wheat, and I'm moving over to Christmas wheat here, and we'll take a look at that here, and I'll show you how we prepare for potential trade coming up here in wheat. This is December wheat, and we'll cover that when we take our break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've had a request to take a look at wheat, and I'm using December wheat now, also known as Christmas wheat. As you can see, it's in the process of forming a beautiful 3-drive to a bottom pattern. We've touched the old low. We haven't gone below it as of yet, but it's set up so perfectly. If you'll notice the little cycles that are in there, that's a little cycle finder tool that many of the trading platforms have. That's just right out of Hurst's book, looking at nominal cycles. In other words, you mark it at one spot, draw it over to the next low, and it moves it over to the next one, and he called that a nominal cycle. And usually they'll work for 1 or 2 repetitions, and then they start to expand and contract. And the reason why they do it, in my opinion, is it's related to the astrological things, but no one's been able to, verify it with 100%. You just got to, look at it. But wheat does respond well to the full moons and new moons, and we're over a new moon, so making a new low here during the time of a new moon is very suggestive of a bottom. However, this nominal cycle looks like it's going to take out into Wednesday or Thursday, so you've got a day or two to possibly get to that level. What we try to do is use the price levels as our tool to enter the market, because that's what we really have to put our orders in on. You don't put your order in on time, you put your order in on price, and that gets you to the spot where you really want to. Okay, getting back to the stock market, one of the reasons for we've had some weakness in stocks, if you'll just give me a second here, I'll put up the chart of the dollar yen. As you can see here, we've had a big move again in the yen. We've broken below major support now of 78% retracement, which came in at that 102 level. We're trading at 101.27 right now, and that sets up a potential that we've said all along that this yen dollar could get all the way back to 95. We have to pay really close attention to the yen dollar at 95 because you remember, back in 3 years ago when the dollar was at 75 and Tom came out with the king dollar. This was the same thing that was happening in the yen, and that was a monster move, and that'll be a major pullback at 95. I believe it's a 61% pullback from 2011, but that's down the road a little bit. But right now, that's one of the reasons why we're seeing, some weakness across the board here on some of these things. What's amazing is, we talked about that U.S. dollar making that beautiful Gartley pattern that we had in the U.S. dollar index just the other day, up around that 98 level. We're now down to the 95 level, and it's starting to drop even more. That's telling us that something is really dramatic happening. We're also seeing some pretty good drama in the Treasury bond market, folks. That's another one that's been very interesting. As you recall, when we came into the show on Monday, one of the things we were talking about was the short Treasury bonds, because they had made a perfect Gartley pattern. You had the ABCD structure right at the 61% retracement. You can see the ABCD pattern very easily over a 10-day period from the 21st of July into August 1st, which is when we topped. And now we've broken down quite a bit. This was the chart that we posted on Monday when they were at 73.15. We're now two handles under that, and we are trading at 71 and change. And I was suggesting that because we had this really strong level coming in here at this 71.25, this is where I felt that it'd probably be a good idea to to book some profits. And so at that 71.25 level, it looked like a really good spot, to take profits. And also, if you wanted to go long. Now, going long certainly hasn't worked right now, but you had a really nice 3-point move to the downside. And if you were to do this trade, the most that you want to risk would be 20 pips. And the reason for that is that's the harmonic number. In other words, the number that you see all the time on intraday charts on the Treasury bond. You'll see 20 and 22 pips all the time. So if the market gets below, 71.05, then, you're certainly, this is certainly not a good trade, and you don't want to do it. We're trading at 71.13, so it's not, it's not too far away from that level. So watch that one very, very closely. The other one is we have the British pound is going to be influenced this week, either today, I believe it's tomorrow, because they're closed over there now. No, not closed yet, but close. They have the Bank of, what do you call it? European Central Bank, the Bank of England, not European Central Bank, the Bank of England is going to be coming out with their proposal to probably lower rates again. Since we lowered rates in Australia last night, they most probably are going to follow through on the UK side too. So we've got more and more influence of negative interest rates, coming into this area. We've had a question about the Dow, the E-mini S&P, and that is, what would I be looking for as far as resistance this morning in the S&P? Well, we've already showed you that the market went right down to where it was supposed to stop, right around that 21.57 level. And if it rallies like it shouldn't get any higher than around somewhere between 21.63 and 21.66. Those were the two areas that I would be looking at. But it's still a bit early. They don't open for another 6 minutes. But those would be the areas that I think would give us some pretty good indications of what we're watching here. But as we pointed out, with this New York Stock Exchange index unable to make new highs, the Dow unable to make new highs, it's telling us that there's some distribution going on across the board here, and seeing it. I happened to be watching the news last night, and I saw Jamie Dimon come on Bloomberg, and boy, that guy's got to be the executive of the year. I mean, to get a $5 million raise when you paid $19 billion in fines, boy, that's really some kind of a major feat, in my opinion. And I believe this is one of the problems that we really need to address, and that is when we have this white-collar stuff where these people pay fines, there should be some jail time tacked onto it, and then that stuff would stop. Because unless jail time is included, it's not going to stop, because they're paying money from the stockholders. It's not coming out of their own pockets. So, you don't have to be a rocket scientist to figure out that. Whether it'll be the Glass-Steagall Act coming back, and it won't come back the way that it was in 1933 for sure, but that's neither here nor there. So we'll see, what's going on with that. I've had a question about the crude oil. We've broken below major support at the 61% retracement, and all I can do now is wait for an intraday move, looking at half-hour charts to give me a nice Gartley or a 3-drive pattern. I have nothing here in crude oil at all to do anything with, so I would be very, very remiss if I didn't say you just have to wait here to see if this is going to hold. It's very, the whole world is bearish, which is good for a rally, but it didn't rally in much. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got a guest right now, Tom Beck. Tom is one of our contributors into the Tiger Den. He also does a lot of work on volume and psychology and stuff. Tom, are you there?
Hey, hi, good morning, Larry. How are you?
I'm very good. What I've done is I've posted the chart of the gold where you're looking at some of the technical things that you're looking at. So I don't know if
you can. Is that the weekly chart, Larry, or
no, it's the daily chart that we're looking at right here. It's the daily chart, and you're talking about topping behavior, that type of thing, and with your volume.
So basically, what you're looking at here on the daily chart, of course, a lot of my resistance information is I look at on a longer term basis, but looking at the daily now. One of the things that stands out on this chart is you look at the last day of extreme volume, and you'll note that there's what we call a large range outside day there, where we had a large price spread from roughly just 1250 right on up to 1350 area.
That was the Brexit date, wasn't it?
Yeah, the dirty old
okay,
Brexit.
Sure.
Yeah.
Okay.
And then what you'll note there is there was a severe pullback right off that high. And this is the kind of thing that I've noted in my work here. Now, if you go back, I call those candles, I call them bottle rockets because they go up and they come down very fast. And this is typical of the way that gold moves, by the way. It is a very, what I would call a trender. And, you don't, for example, if you look at that S2 support there that I outlined on the chart, when you get these large range candles, quite often you do not get a support test. And as you know, we believe that all high volume events are tested eventually in the market. Mm-hmm. So that's what you have there on the daily chart. We're currently in a bottoming behavior pattern here. As you see, you have the smaller range candles. We had a volume washout where things just kind of we had a volume climax, the red candle there at the end, and then we had a thrust candle off the low. So right now we're trending back up. We're going to test that 1377 high here. And if you look at the weekly chart, I have a weekly target here of 1425. And the way that I derive that is looking at the behavior of the weekly gold with respect to the up and down. Now, if you can put that weekly chart up, we can see that a little bit better.
I'd like to let the folks here that are listening know that when Tom and I were talking, Tom's been around about as long as I have, and I think that's a good thing. But anyway, you attributed a lot of your success with this volume to things you learned from Tom O'Brien, as you said.
That's absolutely correct. I took his seminar in 2004, and actually prior to that, I thought I was a smart guy and could invest on fundamentals, and I was absolutely wrong. And what I did is I started a period of study, and then I started just doing for myself. I started doing forecasts for the day-to-day, and the reasons for that is this. I have a pilot's license. My dad was an airline pilot. I find that a lot of what we do is very much like flying an airplane. First of all, we have a map. In fact, on the airplane, we even call it a chart. So what I think of is waypoint to waypoint navigation. So this is what we look at. We want to know the destination. We want to know, we have to be prepared for that destination too. We want to know, for example, at the 1377, how does it test? Do we have another one of those shooting star, bottle rocket candles that just blows it off and then, rejects the price? Do we go up there and we just tick over and reject it? That's kind of the kind of thing we look at. We look at the behavior of these tests. So the good news, however, about TA is that it's not multi-directional. It's prices either go up or down or sideways. So so
that part I'm aware of.
This is the number one rule in flying and navigation. You must stay ahead of the airplane, which means if when you arrive at the destination, it's too late to fumble around for the radio frequencies to talk to the tower. Yeah. So it's the same thing here. You got to know where the resistances are, where the support is, and hopefully, you look at those in multiple time frames so that you're prepared. So you can't be fumbling around. You got to know what you're doing. You have to know your target, and you have to be ready to execute. Mm-hmm. So it's the same way in trading. You have to know where the prices are going. You have to know your destination. All right.
My good friend Jim Twentyman said that he had a plane, and he said the secret to flying is to make sure you have as many landings as you do takeoffs.
That's true. Hey, one of your contemporaries is a man by the name of Joe DiNapoli.
Oh, Joe's one of my buddies. I taught him Fibonacci in 1973 at the Conti Commodity building on Wilshire Boulevard in Los Angeles. Joe trades out of Bangkok now.
Yes, he does. What Joe said? Joe said his best students were ex or current airline pilots. So
I've always said that too. That's correct, because you do work with charts and you understand coordinates and you have time to work on the patterns and stuff. Plus, you make a good income that you're able to try things before you finally learn what you're doing. Let's get back to business here on this gold chart on your weekly, because I really have an interest in this. Yes, I've got the weekly up, and it's got some really great information on us. Why don't you explain to us what you're looking at here? Oh, one thing, in just a second, Tom, we're going to have a break. So when it does, I'll alert you, and then we'll have a break, and we'll have you on right after that, okay?
That's fine, no problem.
So go ahead and keep talking till the break. Go ahead.
All right, so we have the weekly chart up here, and you look on the left-hand side, and what we've done there is just simply look at the weekly chart. We look at two things. You'll see the S1 support there at 1070. The S1 was the volume low there, and so that set up. That's really set up the bottom on the right-hand side of the chart. If you look at the line going straight across, there's 1070 right there, and I was able to predict for my subscribers, right from the get-go, that if this thing kept going down and down and down, we're going to end up at 1070. So that's where we did end up, and then finally we ended up at 1045, which was the actual low, which came on lighter volume, and that's the way we like to see them. And if you look at the boxes down below, you can also see the quality of volume patterns that you have. You have the initial thrust to the target there around 1425, which is the number that I think where we're going to in this move here. And then we have another volume acceleration to the highs. Now, one of the things I want you to note here, though, is take a look at that high and look at how it was made. What you see there is you see a lot of those large range candles, and this is a weekly chart. So, but, things that you don't see inside this weekly chart is that, for example, coming down from later in the process here, we had some 150 point. Okay, got it.
We got a little break here, and then we'll have you right back, okay? Stay with us. Tom.
Super.
Back.
Mm-hmm.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives.
If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're talking with Tom Beck out of Las Vegas, Nevada. Tom, let's just, before we get back to this gold chart, this weekly chart, which I'd like for you to finish, tell the folks a little bit about yourself and also how they can reach you, because, you know, anybody that does the volume type of work that Tom O'Brien has stressed upon us, I think it's worth looking at it because you're looking at it from a different perspective. But tell us a little bit about yourself and how the folks can reach you.
Well, my primary career was I was in the semiconductor industry as a headhunter, and I helped build companies in the semiconductor industry for about 35 or 40 years. And, you know, we had a rough year in 2000. You may remember the dot-com crash, and, you know, my business kind of went south. So I had a pension plan, and I just wrested it away from the people who were managing it, which were not doing a good job. And luckily, got it away from them in time. In 2000. And so I started investing my own account. I started getting into technical analysis. I took Tom's course, and that really set me off on a sort of a journey here. And, you know, my style is I like independent study. I like to learn things for myself. And so I did quite a bit of study, and then, you know, I set about doing charts and, you know, doing forecasting for myself. And I picked up a following of people on the internet through some of the websites, and I had a suggestion that I should start a daily service, and I said, okay, let's do it. And I started in January 2009, and actually using some of the techniques that I learned along with some of the techniques that evolved in my work, I was able to narrow down the low in March of 2009. And I did pick the date of March 6th, but I was only looking for a bounce into March 12th. Well, we had a bounce into March 12th, but it didn't stop there. Okay, yeah. So basically I started my service in 2009, and so for every day since January 2009, I have provided a forecast for 11 different things: the SPS, the NASDAQ, SOX index, the various and sundry sector indexes, gold, gold and oil. I do that every day. I also have 2 feature stocks, leadership stocks, Goldman Sachs and Apple. So we have 11 different things we rate every day. And so that doing that over the last 7 years, I've archived all the forecasts. And, as we move through these price areas, these price zones and ranges have personalities. And you can just dial right back, look at the price, dial back to when we had that price, and see the behavioral aspects as well as get a local read on the support and resistance, which really doesn't change.
How do folks reach you if they wanted to get a sample of what you...
The best way to get to the site is volumedynamics.com/forums, and my email address is volumedynamics@aol.com.
Okay.
All right, we want to get back to the weekly chart.
Yeah, I want to get back to that. I want to get back to that gold chart. That has a lot of interest from my perspective, and also the people here at TFNN. So why don't we finish up with that weekly gold chart?
All right. So what I wanted to point out is that it's a trending instrument. A lot of the time, gold just goes sideways in a large range. Okay. Of course, it's multi-hundreds of dollars price. So it goes sideways a lot, but when it takes off, or in one direction or the other, it is absolutely readable because you can see the volume. For example, if you look at the volume on this last move here, it's been absolutely ballistic. So that's all good. I mean, there's an old saying that volume precedes price. And right now, of course, this last probably 6, 7, 8 weeks, we've been very much sideways here in this little range. And I think we're getting ready to pop up. One of the things I was going to point out about the bottle rockets you saw on the daily chart, if you're interested in shorting gold, first of all, I don't recommend it, but if you're interested in shorting gold, what you want to be looking at is you want to look at those large range days because it has a tendency to pop through it and then drop. So, in this particular case, you had the 0.382 retracement of the move down from 1920 to 1045 is right around this last high here at 1377. So what it did is it got to that 0.382 and it choked on it and really reversed and rejected that price. And there was a good trade there, that went down substantially from the 1377. Where did we go to? How far down did we go? Was it 1215, Larry, or 1315?
On the second one, it got down to 1310.
1310. So there's a good solid short there. But the thing is trending up, so it's just not a good idea to be short gold. I mean, you want to be buying the pullbacks.
That sounds pretty good. Well, listen, we want to thank you for being on, and I will keep closer contact with you here because I think I'd like to have you on again. And one thing you could do from your perspective, if you see something that's really interesting, give me a call or drop me an email and say, hey, Larry, let's talk about this and something you might want to share with us because, Tom O'Brien's been nice enough to share all of his stuff with Volume over the years. And like you mentioned, it was a big help to you as it was to me. So if we can match some of these things to some of the things that some of the other folks in the den are looking at, it would be a big help. So if you'll just let me know if you see something interesting, to either drop me an email or just give me a call and we can get you back on the show again.
Super.
Okay, thanks for joining us.
Thank you very much for the opportunity, Larry.
Hey, it's my pleasure. It's good talking to you. You betcha.
Thanks.
You bet. That was Tom Beck of Volume Dynamics out of Las Vegas, Nevada, a former airline pilot, turned into a commodity trader and stock trader. And I can verify the things about the pilots being good students because I've had many pilots over the years, and they've always done very well because they do understand charts. They understand danger, of course, and risk. And also they do have the time to study, the charts to learn to understand what technical analysis is. And remember, the main thing is that it's probabilities. There's never a certainty going on in these markets ever. That just never happens. It's never going to happen because that's just the way the nature of how the markets move around. So that's neither here nor there. Now we did get up to that 2164 level in the S&P. Then we sold off a little bit, but this is amateur hour. when they're doing their first jumping around here in the morning. It's still pretty good. We have a very strong number down there, folks, at 21.55. I posted that early this morning. That's the large ABCD pattern that's still setting out there, and we could easily make that without any trouble. It should be some support, but anything below 2150 in that S&P today would be something very, very negative for stocks on a longer term basis. And remember, we've been up for a long time. We have the new moon that came in today. It probably started triggering sometime late Sunday night, early Monday morning, because that's when we had that 3-drive pattern happening. So look at what's interesting here is that we have bonds going down and stocks going down at the same time. That is an unusual situation. So that's the key. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the E-mini S&P that we started the show with today. As you can see, the big ABCD pattern that extends down to this 2154 level. The importance of that is twofold, because not only is it an ABCD in perfect structure, and what I mean by that is that the rally back was exactly 61% retracement. And if you'll notice the notation down there where you see the 1.618 expansion number also coming in at 2154, also gives credence to the fact this is going to be a very, very important bottom. That's why I'm saying that if we break below that 1.618, then look out, because then we're going to be watching, a market that is going to most probably go a whole lot lower. Anything below 2138 in the S&P, I don't think you're going to see that today, but you're going to see, if it does get below that point, then you're going to see people beginning to realize that, yes, there's a chance that there might have been a major top here full on this new moon that we've had, today. So we'll watch that closely. But 2154 is the number you want to watch. It could hover around a couple points, 2 or 3 points on either side of it, but that's primarily what it would be looking for, would be the 2154, because of the two numbers there, the ABCD, and then also the 1.618 expansion number. Also, our bonds are breaking down. They've gone below the low I expected them to be. They're already 19 pips below. So anything below, 171 in the bonds is going to suggest that we're going to be going up in interest rates and not down. There is one chart that I would like to focus on one more time, because this is the one that I think is very, very important. And this is the Japanese market, because Abe has brought in some new quantitative easing these last few weeks, and they're failing, folks. They're not working. The market is not accepting what he's giving them. So be very careful here. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.